Traders, you need this. A survival guide to help you navigate the trading world like a pro. If you've ever felt stuck, overwhelmed, or feel lost on your trading journey, this guide is your blueprint to staying disciplined, improving your consistency, and building a profitable strategy. By the end of this video, you'll know the essential principles that can transform how you trade. From managing risk to improving your edge, these are the foundations necessary to help you reach your goals. Whether you're a beginner learning the ropes or a seasoned trader looking for an edge, this guide is packed with the steps you need to take in order to level up. So grab a pen and paper or bookmark this video because we're diving into the key steps that will make a major difference in your trading results. The first one is do not trade live funds. Instead, stay on a demo account. First thing to do then is to go onto your search engine. Here I'm using Google. Enter MetaTrader 4 demo account, and straight away you've got many options to choose from. So a demo account is actually live market data without having to risk any real capital. So you're able to familiarize yourself with what trading is and the markets itself without having to risk any capital. This is a key point because until you're profitable on a demo account, you really shouldn't be trading live funds at all. Number 2, stick to your stop losses and don't alter them mid-trade. Stick to your stop losses. They help you to manage risk. So in this example here, the green line is going to represent our entry level. The red line is going to represent our stop loss level. So this is a buy position. We're expecting the market to go up in our favor. However, if we notice that the price has a red candle, and sometimes people think, oh, let me just move my stop loss as I don't want to get stopped out. If I move my stop loss, I've increased the amount of risk, which is going against my plan. So if I go against my plan, you've got a sure way of not being consistent and losing money. However, there is a chance that the price may not hit your stop loss, but let's see how this would have played out. Price goes up a little, then eventually we end up getting stopped out here rather than up here. So you've ended up doubling your risk, which is never a good idea, and ended up losing more. So again, stick to your stop losses. Number 3, place stop losses in technically sound places. So generally, sometimes people decide to have stop losses based on number of pips or amount of capital. But generally, if you base your stop losses at highs or lows of level of support or level of resistance, that's the safest place. So if we zoom out now, we can see that we have a low here previously, which would be a safe place to place a stop loss in a long position. Or if it was in a short position, then the safe place to place our stop loss for a sell position would be at a high. So generally, at lows or at highs is the safest place to put stop losses based on technicals. Slow down, take it slow. Don't try to master everything at once, especially with technical indicators. So if we click on the chart now, this is MetaTrader 4. If you click on inserts and go to indicators, you can see that there's a vast array of different indicators that you can actually be using. However, when you're starting out, it's not a good idea to try and master every single one of these indicators. A good idea to start with would be to use price, and we have these candlesticks, which are a technical indicator. You can also use indicators such as moving averages. So again, the main thing is to keep your charts simple, not put too many technical indicators on them, and then gradually, once you've got a clear understanding of them, then you can start to apply them. So again, we've got candlesticks, which is going to cover price and key reversal candlestick patterns. You've got moving averages, which is what we've put on here. You can also have RSIs and Fibonacci and many other technical indicators. But again, keep it simple to start with and don't try and put too many on there. Stick to your strategy. Don't constantly swap and change. Once you've got a strategy and you've tested the strategy and you're happy with the results of the tests, it's a key thing to stay with the strategy and don't keep changing it. So I'll quickly show an example. Imagine that we are here in the markets. I'll get the Fibonacci, a quick Fibonacci retracement strategy. You draw your Fibonacci from the low to the high. You'll wait for price to retrace to reach the 50% level. As price reaches the 50% level, you'll enter the market for a long position. You'll buy, and then you could have made profit. However, the same strategy also has losses. So on this example now, you draw Fibonacci from the low to the high. wait for the price to reach the 50% level. Price reaches the level but carries on falling. So again, the same strategy which can be profitable can also take losses. But the key thing that I was trying to show you is that no strategy is 100% certain. However, with proper testing and understanding of the technical tools, as well as just giving yourself more of an edge, you'll give yourself more of a probability of having profitable trades, especially when you manage risk properly. But the main thing is, once you've got your strategy in place and you're happy with the tests and happy with the results, stick with the strategy and don't keep on changing it. As if you keep on changing the strategy, you may end up with just taking a lot of losses. Expect the unexpected. Protect yourself at all times. Come to the markets with an open mind and expect anything from the market. So for example, you may be looking at the chart and think that the market can't go any lower, but it definitely can, and it has done many times. So the safest thing you can do is stick to your trading strategy and manage risk properly. Don't think that the market can't do anything, or don't think that you can change the direction of the market. Again, the market has a mind of its own, and the best and safest thing you can do is follow your strategy and manage risk. Because when you manage risk, even if the market goes against you, you still capture losses. Patience. Be patient. So essentially, pretty self-explanatory. In the markets, you want to be a sniper rather than a mercenary just running around. When you're a sniper, that means you have to sit down patiently waiting for your setup. So you've got your strategy, you need to wait for certain criteria to be met. Only then do you pull the trigger and enter the trade. If you enter the trade without having a strategy in place or proper risk management, you're essentially firing from the hip, not aiming, so you're liable to miss. Whereas when you be a patient sniper and you wait for your opportunity to come and all criteria to be met, you have more of a likelihood of becoming profitable. Lock in profits. Set yourself achievable targets. Again, anything's possible, but at the same time, you still want to treat trading as a business and make sure you lock in your profits. So in this example here that we've got, we could be in a long position, so we've entered the trade at the green line. Our stop loss is at the red line because you may have entered on a breakout and place your stop loss here to stay safe. The market's going in your favor. You're making some profits, and as you're making in profit, you may have a take profit at this level, which means if price reaches this level, you'll end up exiting the trade with this much profit. So again, the market's going in your favor, everything's going well, and you're thinking, oh, I've risked this much, I've made this much, which is probably like an 8 or 9 to 1 risk reward ratio, which is very high. Realistically, you should have been locking in profits so that if worst case happened, you'd leave the trade with that much profit. However, you kept your stop loss at this level here, which is what happens often, as when people have take profits in place, they like to leave the trade. The market continues to go in your favor, nearly reaches your take profit level. However, price starts to decline and you're patiently waiting, hoping that the market may reach your take profit level, until eventually, instead of reaching your take profit level, price then reaches your stop loss. So you ended up losing the trade in a loss. You started off the trade in profit, you made all that profit and ended up in a loss, all because you didn't manage your position correctly and lock in profits. So again, set yourself achievable targets and make sure that you manage positions correctly and lock in profits. Treat trading as a business, not as a lottery. Keep a trading journal. Keeping a trading journal is something that will help you immensely in your trading journey. So for example, you can have simple questions like, why did I enter the trade? You may say that you used one of your strategies. In this quick example, I said I entered because price broke above the previous high. So we have a breakout strategy here, which is the entry. Entry is the green line, the red line is the stop loss. What did I do right in this trade? So I had a good trade and was in a profitable trade. What did I do wrong? I didn't manage risk, so I didn't lock in my profit when I should have. How can I improve? I will develop and improve my risk management so that I lock in profits. So a simple way that this person could use is by locking in profits as they make them. So instead of being stopped out here as a loss, they could have gradually locked in profits until eventually may have got stopped out at this level, so you would have left the trade with a profit. So again, keeping a journal is a way to keep yourself accountable and a way to improve. Hopefully, this guide gave you the clarity and tools you need to level up your trading. But remember, this is just the tip of the iceberg. If you're serious about taking your trading to the next level, go to my website, trader187.com. That'll be in the description. To join my Discord group or reach out for a one-on-one consultation. Whether you need help with strategy, risk management, or passing trading challenges, I'm here to guide you. There's so much more to learn, and I'll be covering it all in future videos. So make sure to like, subscribe, and all that other stuff. Until next time, trade smart and stay consistent. See you in the next video.